Welcome to the ABCs of Real Estate, your
mostly
weekly real estate show that goes over the A to Z terms of a real estate transaction. I'm your host, Ryan.
And I'm Courtney.
Courtney, what letter are we going over today?
Today we will be covering the letter F.
E. Oh, F.
F. Today's F.
Yeah, today is F.
Last week was E.
Yes.
And what does F stand for?
Financing.
Yes.
Great topic. We are not financing professionals.
No.
We would like to clarify that right now. We are real estate professionals, so we know a little bit about it, but always go consult a lender.
Yes.
And a mortgage professional.
Dictionary.
Which we have one of those if you need it.
Just
let
call
us know.
us. Dictionary definition.
Dictionary definition of financing is providing funding for a person or entity for the purchase of goods.
And the real estate definition is providing funding for a person or entity for real property.
Love it.
So how
very similar,
yes.
But just that little bit last part.
So there are a few different types of financing.
Yes.
We're going to cover just the basic three main types today.
Our favorites.
Yeah, our personal favorites. And we're going to start off with conventional financing. Most likely, or not most likely, this is definitely the most popular financing option in our industry right now. Your down payments can range from as low as 5% onwards and upwards to as much as really you want.
Yep.
And this is not backed by the government. And these are, this type of financing is definitely ideal for borrowers who have good or excellent credit and a good debt to income ratio.
Yes.
So,
it's easier to qualify
yes.
For conventional loans as long as the buyers do have that good credit and a larger chunk of money to come to the table with for your down payment, closing costs, and things like that. So we would call this the safest type of financing that's available for buyers today.
Right.
Yeah.
And our next financing is FHA.
FHA. So Federal Housing Administrative Financing is a great option for first-time home buyers, or it doesn't have to be first-time home buyers, but it's a really good for people who have maybe not the best credit or need that lower down payment. Down payments for FHA loans are 3.5%, and the credit on that one starts at only 500. So you only need a 500 credit score and 3.5% down to possibly buy a home.
Right. The kicker with this one is since you do have that lower down payment, so anything less than 20%, you will be entitled to pay for mortgage insurance.
Yes.
So generally, this type of insurance is going to increase your monthly payment, and it's all a variable, so your loan officer can do that calculation for you.
Yes.
But that will definitely increase the monthly payment.
For sure.
Yes.
And then what's our last top three go-to financing option, Courtney?
So this one is the VA loan.
VA loans are amazing.
Yes.
Courtney, what does VA stand for?
It stands for Veteran Affairs. So this loan is available for service members in the military and their families, and it is backed by the U.S. Department of Veteran Affairs.
Yeah, so if someone were to default, the Veteran Affairs then pays back the loan and covers the borrower.
Right.
Yeah.
And to qualify for this loan, borrower needs suitable credit, sufficient income, and a COE.
Certificate of Eligibility.
Yes.
Yes.
And to attain that,
the borrower must be in good standards in the military, not be dishonorably discharged, or his or her spouse, and yeah.
Yeah. So those are kind of the top three that we see. A few other we see here in San Diego is cash, of course.
Yes. Always a great form of financing.
Right.
Is cash.
And then there's also seller financing, which is basically just backed by the seller, or hard money loans, which is going to be a much higher interest rate, a higher down payment, but maybe if you don't have great credit, or your debt to income ratio isn't great either, this could be an option for you.
Both good options for investors as well. So flips, buying, holding, and refining out after a while.
Right.
Yeah.
And then even to dive deeper within these types of financing, you can have basically two different types of rates.
Fixed rate and adjustable rate.
Yes.
Courtney, what does fixed rate mean?
So a fixed rate is actually simple. You're gonna have the exact same rate for your entire loan period.
My favorite.
Yeah, so your monthly payment is going to stay exactly the same, no guessing games.
No surprises. It is what it is for 30 years. It doesn't change unless you refi, and it gets kind of messy. But
and then your adjustable rate, also known as an ARM. Those come in various, what is it? They come
terms.
There's various
length terms.
Right.
So a 5 7-year ARM, 7-year ARM.
Right.
It all depends on kind of what your situation is.
Right. So that rate will stay the same for either those 5 years, those 7, for example, and then after that, the rate will adjust moving forward from there.
Yeah. So if you know that you're going to move in 3, 5, 6 years, could be a great option to get a lower payment up front, knowing that you're going to sell. But there is also always that unknown
in the future. Right. So this covers financing.
Financing, F.
Again, we have a great loan officer. If you want their contact information, just let us know, and we are always here to help.
Have a good day, you guys.